Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar capped a strong week by posting a fresh 2-month high at 64.07 on Friday. This follows Thursday's economic data from the Australian Bureau of Statistics, which showed the economy added 44,000 jobs in January, more than double than expected 20,000, but below December's 60,000 gain. Meanwhile, the unemployment rate edged up slightly to 4.1%, as anticipated from 4% in the prior month. The robust employment data reinforces expectations that the Reserve Bank of Australia, or the RBA, will tread cautiously on further rate cuts. After last Tuesday, the RBA delivered its first rate cut since November 2020, following the official cash rate, or the OCR, by 25 basis points to 4.10%, while signalling that the inflation fight is not quite over yet. A sharp decline in the US dollar also, or the DXY, which measures the greenback strength against a basket of 6 major currencies, also gave the Aussie a boost. The DXY settled after tumbling at 106.50 in New York. Looking ahead to this week, we've got a handful of data, starting with Germany's inflation report, the US Q2 GDP revision, and also key focus will be on Australian monthly CPI and the US core PCE index, the Fed's preferred inflation gauge. So looking at the technicals, although we've seen a slight pullback, the market, broadly speaking, is still bullish, and therefore I do anticipate a rally on to 64 to 65 cents, and the 60-day moving average is seen around the region of 62.90 to 63 cents. Overall, though, it was a choppy week for the markets as US President Donald Trump pledged more tariffs. But the euro remained in a confined range, continued in the rally from the start of last week, and holds to a positive bias, but slightly buckled from Friday. Nevertheless, I still feel that the market will be somewhat bullish into the start of this week. And if so, the short-term trend should act as a guide for traders and eventually see a move on towards 106 as a potential target. Well, it was all cheers when it comes to dollar yen. It wrapped up the week reaching its objective of 149.2060 after printing a low of 148.91. With the bottom side target now reached, I'm actually going to sit back for the moment, short term, and see how we progress at the start of this week. Even though the technicals are negative, let's see how the market plays. As a break below 148.7090 would expose the region of 144, but it will be a bumpy ride. Sterling, I still feel, is bullish, as we can see here. A strong challenge on Thursday, a small pullback on Friday. Overall, though, the measured move from this inverse head and shoulders, as you can see here, looks to 129. The ADX is bullish, a slightly buckled RSI, but a positive MACD should keep things in focus for this week. And as I mentioned, the target being the 129. Any weakness should find support around 125.65.90 and the immediate resistance around 126.65 to 127.25.35, or viewed from the intraday report. Turning to commodities, it was another positive week. Despite profit taking seen on Friday after falling from its record high, it marked its 8th consecutive weekly gain, driven by concerns over more trade tariffs from US President Trump boosting safe haven, and also the fact that the dollar dropping did help the market rally after the FOMC minutes on Wednesday. Technically speaking, though, there is a little bit of divergence here and a weaker MACD, therefore it will be a bumpy ride to $3,000 an ounce, but the pullback should be brief and temporarily, as I feel as we've seen any pullback, the market is still snapping up bargains, and therefore again I anticipate we could see support around 2,880 to 88, and in the interim of that 2,911 to 2,925 support. But overall, though, I'm not discounting further upside attempts or strength, so let's not rule that out. Wrapping up with oil, it dropped $2 on Friday and now back towards the bottom side of its range, seen at 69.60.80. Although the technicals have buckled and somewhat bearish, I still feel at this side of the range the market will bounce, and therefore looking for a retracement back to 71 to the objective of 73.30, which was slightly shy of its target last week. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed the great start to the new week.